It's a quiet afternoon at the used car depot in St. John. A cut to the nation's key interest rate announced today in theory would make things busier. But owner John Trivet says otherwise.
People's credit is going to affect the rate that they get, not so much the prime rate. Used cars, again, a quarter of a point. If you do the payment and work it out, it's not a ton of money.
It was the first rate cut made by the nation's central bank since March. It's a cut of 25 basis points to lower the interest rate to 2.5%.
Any reduction in interest rates is always good for anybody who's borrowing money.
But St. John realtor Bob McVicker admits the rate reduction won't make a big difference in his area. That's because the demand is heavily outweighing supply, with an average home in the greater St. John area going for 8 to 10% over asking.
We already have more buyers than sellers. But I think the biggest impact that we're going to see in a positive way finally with some reduction in interest rates is for those folks who are going to be renewing in the next year or so, because that's a doubling of interest rates or more.
Reasons for the most recent rate cut include a softening labor market and a slowing economy as a result of uncertainty surrounding tariffs. Looking ahead to the rest of 2025,
I think we might have another rate cut before the end of the year. There's still a few more announcements to come. We could have one in October, or we could also have one in December. I think you'll see one before the end of the year. If not in October, then in December.
As for the market impact, Mang says there won't be much of a change following today's cut announcement, which had been expected for several weeks. Ava McRae, CTV News, St. John.